Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, September 30th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Your likes is what keeps this channel going, but more importantly, the more likes this video receives, the higher it is scored in the YouTube rankings. And the way YouTube algorithms work is the more likes you receive, the more popular they become, and more people will see this video and benefit from the knowledge that I am sharing. So again, please don't forget to hit the like button. We are hearing lots of doomsday scenarios, especially with the war in Ukraine, with Putin warning of various nasty consequences and lots of events happening this week. The stocks are definitely not liking what they're hearing, and we are seeing new lows. Utilities also hit back into a bear market, and they were in the bull market until very recently. So now we have most of the stock market in the bear market, most of the sectors in the bear market. High yield bonds are also moving yet lower following last week's support break. This is not good for stocks. Could dollar be topping? It's possible. There is a shooting star candlestick, and I'll show you what I mean on a weekly chart. And could gold be a buying opportunity? I mean, if the end of the world is indeed coming, gold is definitely the thing to have around. And Bitcoin is just doing not much, kind of going back and forth. Downturn is still in the long term for Bitcoin. If you're a subscriber, stay tuned. We have not that many stocks or securities we covered this week because there was just not that many events in the sense of new events. We are basically short most stocks. And they are either reaching their targets or they have reached their targets and we just continue to hold on the short side. So if you're a subscriber, stay tuned. We'll have coverage of all the stocks: crude oil, Walmart, Tesla, Blue Apron, ChargePoint, Las Vegas Sands, Plug Power, Revlon, Sunrun, and Wynn Resorts. Again, stay tuned if you're a subscriber. If you're not a subscriber, head over to MasterChartsTrading.com, click on sign up for one of the products. I have 2 products and 2 packages, the trading indicators, which I will be using throughout the presentation, I'll show you in a second, and the newsletter, which is what I send out on daily and weekly terms. Alright, let's get to it. S&P 500, this is S&P 500 continuous futures. I'm using TradingView.com interface. Notice where I'm hovering, it says TradingView.com. This is basically a graphing interface. You can have a free TradingView account, and then once you open a free TradingView account, you can have my indicator lines on your chart. So indicator lines are these green, blue, red, and yellow lines. What they do is they show basically good levels to buy, sell, do nothing, or continue, for example, holding. Most importantly, they simplify your decision making when you trade, and basically that's all I use in my trading. So looking at this chart, again, this is symbol ES1 exclamation point, which is S&P 500 continuous futures, probably the most important chart in the world. The bear market for this security started on April 29th of this year. How do I know? Notice on this chart the security closed below this yellow support resistance line, and then this is the line in the sand. We say, okay, at this point we're going to say that stocks are now in a downtrend. We're going to be looking for opportunities to sell short. Where do we sell short? We sell short on bounce towards the red support resistance line. So for example, we had a great opportunity back here in June of this year with a nice big drop, and then another great opportunity in August, and a follow through here in September, and finally we are indeed hitting new lows. So we haven't yet closed, we still have about an hour of trading left in the day, but this week we have indeed hit new lows. This is a 52 week low that was hit on 28th of September, and then a big rally, and we were like, everybody was just, oh my god, we're gonna rally, maybe. But the way things are going, and with all the terrible news out there, especially with the war in Ukraine, and Putin is just not backing down. He's escalating. He's ordered a draft in Russia, and is threatening to use nuclear weapons. Now, again, I'm not a geopolitical analyst or geopolitical whatever specialist, but what I know for sure is that if somebody there's absolutely no way that the collective West should give in to threats from Putin to use nuclear weapons, because if we collectively give in to the threats, the next thing you know, he will be demanding parts of Finland, parts of southern states like Georgia and Armenia, and then the next thing he will know, he'll be demanding Alaska from the United States under the threat of using nuclear weapons. So under no circumstances should we give in to his threats. So it is basically terrorist state, even though it's technically not yet terrorist state, but if we give in to his demands, then again, next thing they will demand more and more and more, and this is not under any circumstances should be done. So we will see what happens, but obviously stock markets is not liking it, and notice right now we're about to close at new lows. So this is quite bad news, obviously. If you look on the weekly chart meaning that each of these candlesticks, each green or red candlestick, is on 1 week's worth of activity, so 1 week. Notice here we're most likely gonna close at new weekly low, meaning we broke below this June 13th, week of June 13th low, and we're about to close below it. Pretty bad news, because it opens the door towards even lower levels, and there's very little support. So support is a relative term, but we look for areas where previous trading was significant. So for example, these two lows here from October 2020 are reasonable support levels, which is around 3200. However, it's quite weak, if you ask me. So my projection here is that we're going to continue lower towards pandemic lows, not necessarily in 1 day or 1 week, but I think it's reasonable to expect those pandemic lows to be hit. What would happen at that time, we will see. Most likely Federal Reserve will lose its nerve and start buying everything, including ETFs, just like they're doing it in Japan. Now, short term, we cannot exclude a rally. So a rally is called a bear market rally. We just had 2 of those. So here's one bear market rally. So bear market started right there on 29th of April, and then we had a rally. There's the bear market rally from the low in May towards the high in early June of this year. Then we made another low, and then we had another pretty significant bear market rally. In fact, we came so super close to breaking out into a new bull market. We came from 17th of June till 16th of August. We traveled from 3600 towards 4300. That's a very big rally for S&P 500. That was a 18 or almost 19% rally. This is huge if you think about it. It's a big move. Yet it was still considered a bear market rally. I held strong. I said no until we close above 43.70. Why 43.70? That's my blue line right there. This blue line was not hit. We did not close above it. We came super close. We came about a percentage point away, but we didn't close above it. And we were looking for a close above it to declare a new bull market. It did not happen. And then we finally had our next short signal right there on 26th of August. Short signal occurs when security is in a downtrend in a bear market, and it closes below this red support resistance line after previously making either a high or a close above it. So that's the short signal right there. Another huge short signal occurred right there on 13th of September, and then we just unraveled and we made new lows. So again, we are in a downtrend. Will we get another bear market rally? Absolutely. I just don't know when, from what levels. Sometime in the future, we will stop going down and start going up, and most likely we will continue towards this red support resistance line, at which point the security will become a great candidate to sell it short yet again. So until we close above this blue support resistance line, which is currently at 43.60, so that means we need to travel from current levels around 20% to where I would say, okay, we're done with a bear market, we're now in a bull market. It hasn't happened yet. And the way things are going, it looks like we're going to continue lower. Same picture goes for Dow Jones. Here's Dow Jones, symbol YM1 exclamation point. This is Dow Jones futures. Very similar pattern. A bear market started back in April. We had several opportunities to sell short, a new low in June, and an enormous rally into August. Notice what happened during this rally and where it topped out on 16th and 17th of August. Okay, I'm not making it up. It topped out exactly at the blue support resistance line. Yet it didn't close above it, so we again continue to think that we're in a downtrend, and we were indeed rewarded with two more opportunities to sell short. One was on 26th of August, another one maybe in the very early day of 13th of September before it completely unraveled. But even if you chose to open at the very end of the day on 13th of September, you still would have been correct. The important thing is that we are in a downtrend, and the trend is our friend. We are riding the trend down. Notice what happened. Dow Jones is leading the market lower. In fact, it made 52 fresh 52 week low on September 23rd last week. I'll show it to you on weekly chart. Here's the weekly chart of Dow Jones. Notice here, last week we actually made a new low, whereas for S&P 500 we did not make a new low. This is S&P 500. This is Dow Jones, made a new low. This week we continued lower, and I mean we just not stopped. It means we sold off throughout the week. Continued lower. So Dow Jones is leading the market lower. What does that mean? Not sure what it means. It just means the large caps are also not holding their own. It's just everything is being sold. Here's NASDAQ, NASDAQ 100, symbol NQ1 exclamation point on TradingView. NASDAQ started its downtrend a little bit earlier in March here of 2022, this year. Big rally, short signal, huge move in our favor from 8th of April into the new low in June. Again, bear market rally from June into mid-August. Great selling short opportunities, and another low today. Most likely it's gonna close at a new low. Let's look at the weekly chart. Yes, looks like we're gonna close at new low. This is terrible news because most likely Monday we're gonna gap down. Can we still rally? Again, yes, it's possible. We just don't know at which point people will stop selling. And again, at which point, even if we stop selling, it doesn't mean we're in a new bull market. Again, bull market is currently for NASDAQ is even further away. It's 30% away. We need to get to 14630, 14,600 or so, for me to say that okay, we're done with a downtrend. And I'm talking about just current levels. I mean, the lines changed, so as of today, as of 30th of September, to get to bullish levels for NASDAQ, we need to move 30% up. Needless to say, it's going to be difficult to do that for NASDAQ. Here's Russell 2000, not much difference, but Russell 2000 actually started its bear market even earlier. It started it in January of 2018. How do I know? Okay, if you have my indicators, I'll show it to you, and notice how easy it is to trade using my indicators. There it is, 18th of January of this year. That's all I needed to really know. At that point, I say, okay, we're done with an uptrend for Russell 2000 small caps. We need to switch our thinking into a downtrend. And we had opportunities on 10th of February to sell short. A couple more opportunities there in March. It was a great result. And another few opportunities here in August and late August. And then we're at new lows. So yes, we're not yet at new lows. You know, Russell 2000 is slightly lagging its peers, but if we look at the weekly chart, you know, this is Russell 2000 weekly chart, and we can look at correlation coefficient. Down below here's correlation coefficient. Notice how high the correlation is. It's huge, very positive correlation. Yeah. Here we had a slightly different correlation, but overall definitely positive. So currently we have 98% correlation, meaning that we're pretty much doing the same thing. So most likely we will hit new lows, and Russell will most likely continue lower. These are pandemic lows, so I don't see why Russell cannot continue, you know, another 45% down. There's just no reason why it shouldn't continue that further down. Now, generally speaking, this is not good for economy. Most likely we're gonna see more layoffs. I'm here in San Francisco Bay Area, and I'm already seeing tech come under pressure. There is less hiring. For example, Facebook or Meta is already freezing all its hiring. Most likely the next thing we will see are layoffs. First layoffs will hit high tech, but by and large, you know, all of the sectors are not immune, so we're gonna most likely see a slowdown in entire economy. Okay, I wanted to show you one more stock related. It is utilities, XLU. So utilities were more volatile, and actually I was here on 28th of July. I was like, oh wow, we're seeing a new bull market in utilities. But really, it was not so much that it was short-lived. I thought it was like a leading indicator. In fact, we hit an all-time high right there on 12th of September, and I was like, wow, something is happening. And despite huge interest rates, and utilities are dependent on lower interest rates because they constantly have to borrow money to finance their projects. No, that did not work. And no, I mean, 2 weeks of non-stop selling, or 3 weeks of almost non-stop selling, culminating today, Friday, the September 30th, and notice what happened. We closed below the yellow support resistance line. That means we're now in a bear market for utilities. Notice on the weekly chart. So a couple of whipsaws, yes, and that's not, system is not perfect. There's the what I thought was the beginning of a downtrend for utilities in June, and then we had again a new bull market right there, 25th of July, and then today, notice a huge candlestick, 8% just this week, and from all-time highs, 16% drop. I mean, in 1 to 3 weeks, just unraveled, collapsed. So this is not good at all. I would expect more downside for stocks, basically. As a bonus, we can look at, I wasn't expecting to look at it, but let's look at it anyways. This is this chart. I don't have it on TradingView. I have it on StockCharts.com. So this is a market breadth. I'm just kind of used to it, and looking at this. This is a New York Stock Exchange Advanced Decline volume line. Okay, again, you can look it up on ChartSchool and just find it. This symbol, $ NYUD. Make sure you make it cumulative when you graph it. See, cumulative. Cumulative. Okay, so notice I showed this bearish divergence last week. It has not been resolved. In fact, maybe it got a little bit worse. So bearish divergence means that we have closed below previous lows for the this advanced decline line, and we have not yet made a new low for S&P 500. This week we are making a new low, but the important thing is I want to show you that the lows for the advanced decline line is actually pointing to further downside, because notice where we are making this low to. It's like levels from 2020 basically, and possibly even lower towards the pandemic low. So the market breadth, how many stocks or how much volume is negative versus how much stocks, how much volume is positive, is leading the actual price of the stock market lower. The reason why this is even an issue is because S&P 500 is capital weight based. So the bigger the company, the more it is represented. All right, junk debt, high yield bonds. So also last week I showed that they broke support. This was the support from previous lows, from June lows. This week we are again moving lower. This is JNK on weekly time frame. Notice we made a new low. We're gonna close at new low. Multi-year, multi-year in the sense of more than 1 year lows, approaching very rapidly towards the pandemic lows. And the way things are going, it just doesn't look like it. It may not hold. That's what I'm trying to explain. Those pandemic lows, it's just like it could be just the beginning, could be more. You see, it could be more downside. So I wouldn't even think about buying stocks at this point of the game. I would think about unloading what I have, looking to buy puts. In other words, place bearish bets on any bounce. Why do I care about junk debt? Again, I wanted to show this correlation. By and large, S&P 500 correlates highly with junk debt. So if junk debt is leading to the downside, then S&P 500 most likely will follow. Okay, very briefly about the dollar index. So dollar index is still in an uptrend. It began its uptrend on July 13th, 2021. How do I know? Okay, this is what happened. This is all I need to know. We see a close above this blue support resistance line. You can find out more about it by reading the description and where to sign up. And this is all I need to know, really. We had a breakout. At that point I say, okay, this is a bullish security. We need to look for buying opportunities. I just didn't know at that time how big of a move this is going to be. And let me show it to you on a weekly time frame. So there it is. There's the breakout July 13th, 2021. And I labeled it a gigantic move. We had a 23% move for the dollar. index versus other currencies. So this is mostly euro, but there's some US dollar, some Japanese yen, some British pound, and a few other currencies like Swiss franc and some of the Nordic countries as well. So overall, obviously this is it's very large, it's huge. British pound just hit a new all-time low against the dollar. This is showing you something. Okay, so now looking at this, yes, we called this, and if you had my indicators, you could have made huge money here, basically. This candlestick from this week, notice what we moved higher towards like 114, and then we moved lower. So it is probably gonna close. Yeah, it's gonna probably close, around 112 or so. This is called a shooting star candlestick, and this usually indicates some sort of a tapping pattern. And now I was already wondering about this candlestick from last week. It's just too big and it's at the wrong place. It's at the end of this, what I think is the end of this huge move. Maybe it's tapping. With all the worldwide events, people are just like, oh wow, what should I do? Everything is collapsing. Should I maybe buy some gold? It's reasonable. It's a reasonable way to think. If paper assets are depreciating, dollar is the only thing that's appreciating, but I want to have something in case of nuclear war breaks out. What's a good idea to have in case of really nasty worldwide events is of course gold. So here's gold XAU USD. So last week, notice on this chart this white line. This white line is basically, I drew it through the previous lows from 2021. It broke below those lows. It closed below those lows last week. This week it also closed below those lows, but notice it's kind of like the opposite of the dollar. Whereas the dollar index was a sort of a shooting star, this is possibly a hammer. So the opposite of a shooting star is a hammer candlestick, where we have a low, and then throughout the week in this case we had a low, but then it rallied towards the high. So possibly a hammer candlestick for gold. Again, if dollar is topping, gold should benefit, because notice how gold is traded. Gold divided by US dollar. So if the bottom part of this equation is getting weaker, currency pair should continue higher. Now, gold is currently in a downtrend, but if you're a bottom picker, the risk is super low right now. This is your risk. Your risk is like 3% basically. Because if you're gonna buy it now, you're gonna put a stop below the previous low, which is about 3%. It's just not far. So if you're a bottom picker, it makes sense to buy gold, especially considering world events. But for trend traders, the gold is still in a downtrend. So if we see any kind of bounce, especially towards this red support resistance line at around 1785, then we'll think about selling it short, just like we did it before. Notice those downward facing arrows here from May into June. Finally, Bitcoin. So Bitcoin really didn't do much for the entirety of the week, kind of just traded sideways. The action is really nothing is happening, so to speak. This is a weekly chart. This is a daily chart. Not much has been happening since June. It's sort of been trading sideways, but the bigger direction is definitely down. Notice the previous alert from April actually gave us 60% gain. So that's just something to think about when you go over to MasterChartsTrading.com and sign up for one of my products. I have two products and 2 packages, trading indicators, which are shown on this chart. These are green, blue, red, and yellow lines, available for TradingView.com. Basically, they help you find trade, so you can make any kind of trading decision. First of all, is the security in a downtrend or an uptrend? If it's in a downtrend, we need to sell it short. If it's an uptrend, we need to be buying. At what point to be buying, using the lines. It's very simple, and I have a section to help you out, trading help. I also have a newsletter which I send out to my subscribers on daily and weekly basis. So, for example, this week we'll cover all of these various stocks like crude oil, Walmart, Tesla, Blue Apron, ChargePoint, Wind Resorts, etc. Best deal is to get both trading indicators and the newsletter at $59.95 per month. I think it's a good deal. And if you need a VIP access, meaning that you get 60 minutes one-on-one screen sharing session by Zoom per month, then you can sign up for that at $259.95 per month. That's it for this week's recap. Again, if you have any questions, please let me know. Thank you for watching, and have another great trading week. Again, please don't forget to hit the like button. Thank you. Bye-bye.